focusing only on the day chart, or mostly, it helps us at times to be on the right side of the trade. But there's times when the day chart looks like there could be a bounce because all the moving averages are going up and they're all spread apart perfectly. You got the 8 above the 20 above the 50, and they're all heading up, except the day gap down, closed it, and it's a red day. That's the difference. Now, on days like this, I like to look for a bounce somewhere because the overall day chart is bullish. But if you're not careful, it can drop so far down that you never really catch the bounce. And the goal would be to, where is it low enough for me to risk my daily loss limit on this trade, 250 that I'm willing to risk. When it was up higher, I drew out my lines. I was going, that's too high for me to take that chance right now. I could have, but it's too high for me to take that chance. Looking here at the hourly chart now, I am seeing an area. Here's a previous day level, and it almost came down to it. And I was thinking, if I could buy as low as possible to that, or even if it sweeps that area, then I can drag my risk here to wherever I enter in. Then I'm moving my risk level down wherever I enter in. I was waiting for it to come down a little bit more. I want to keep this entry and risk amount the same, 250. So wherever I get in that thing has to be where I'm willing to get out, start my trade. So it started to bounce. I was like, okay, it's going to be a V-shaped recovery. I'm going to miss it. But here it comes back down. This could be the bottom of the day. I don't really know. And there's another chance for me to wait a little bit longer towards lunchtime to see if this is going to hold and keep going up. And I could just simply enter in here and use this newly developed low. Now I can maybe trust this level here, that this is the morning low and it's going to have a substantial bounce. Even if it comes back down, this could be the low. So I guess what I'm trying to say is, if the day chart is showing an overall bullish tone, all right, and all the moving averages are in the same direction, this is an overall bullish market. All these red days, you could try to bounce it back up, unless it just keeps going. But see this giant red day right here? Even this giant red day right here, all the moving averages stayed in the proper order above the 200. Okay, even on that red day there. So here's another red day. All the moving averages are in the proper order. Now, I don't blame anybody for shorting, but when all the moving averages are up like this, there's a high likelihood that price could bounce up pretty nicely. And that's kind of where my mind is biased on, the bounce up. Only because now, if we had the moving averages crossed over, if the 8 had crossed over the 20, right? And now we're having an 8 cross the 20 and price is heading down, then the whole thing changes for me. I guess that's the distinction I need to make. It's that we have a bullish day that could bounce, and it could bounce because all the moving averages haven't crossed yet. They're still in a bullish direction. So my idea is that, this thing could still bounce. No moving averages have crossed yet. So that's why I'm looking to bounce it. Okay, and I did bounce a 1-to-1 small little profit, $28, and I've been waiting ever since to see where it's going to go, to where I could possibly jump back in it. Okay, and you can see right here, once it crossed this red line right here, there's a red line right here, which means it's some days low, and it tested it and kept going. I was like, this is not it. I could have done it there. Let's see, if I did do it there, I would have already been out for, I would have been out for 1-to-1. Let's say I got in on that liquidity sweep on that day. Say I got in down here even at a good price. Here's my stop loss. It would have hit me. So I'm looking at the next level, which is another day's level. And I'm calculating, where can I get in this thing and keep my stop loss down low enough so that the $250 will not be hit. So that's where I'm challenged at right here, looking for that possibility. So this whole video is about learning how to use the day chart, the moving averages, to keep you in the bias that you think is right, which is long, even though you're having a red day. Now, the other option is forget about the day chart, forget about the moving averages, forget about the possible bounce. Take advantage that all of your time charts, the hour time chart, the 10,000, the 5,000, the 15-minute, the 5-minute, and all the way down are all saying it's time to short. And that's another thing I need to understand. I actually made some notes today about that, and this video will help remind me that there's two ways of looking at today, in my opinion. Ignore the daily possible bounce and just jump on when all time charts are all going in the same direction. It's not like one or two time charts are showing down and another couple are going up. You don't have that mixed signal on anything, except the moving averages on the day chart are still kind of bullish. And so you would anticipate a kind of a bounce deal there. But other than that, on a micro level, from the hour chart down, everything is pointing down. So shorting in that environment is probably a better way of taking this kind of trade, taking this kind of day. And like I said, a bounce, if I would have caught this bounce right here, if I would have just timed it right on this right here, would have been the best entry. Once it breaks out right here, crosses this trend line, tests in that area, you jump in, and then my stop loss would have been down here. I could have made 1-to-1. So I'm not saying that the bounce off the day chart idea is bad, with the moving average is still bullish. I'm not saying don't do that. I'm saying that's why I would do that. Why I would take a long position on a day where all the other time charts are pointing down. The reason why is I just showed you on the day chart that all the moving averages are still very bullish, that this price could just be, quickly do a V-shaped recovery and bounce right up. On the other side of the coin, the best trade opportunities could be, since all time charts are agreeing to the short side, to jump in on a short side opportunity, trend line break, a bear flag reversal, a bear flag break, a red takeout green candles, and all this, go short on it. So I'm torn between which way I want to do this, and having those options and thinking it through and understanding the dynamics of going in either direction is very important to expanding the trading psychology and experience as we're watching this develop. So it's still even developing short opportunities. I still may get my long chance when it breaks this red line. If it breaks this red line, I still may get an opportunity to short that on the day chart. Go long on the day chart. You see, it could come all the way down to this 200 moving average. It did over here, but it just kept right on going. And it is looking like that kind of day where it's daring you to jump long. It's daring you to do it just so it can, barrel right past your stop loss. And I'm cautious on that as well. And maybe I should just go with my second option, which is just ignore the day chart and just start getting in on this bear flag break right here, stop loss here, 1-to-1 down here, and just keep on going with the short. And I'm really going to think about that. I'm really going to think today's experience through here. Missing a lot of good short opportunities because I'm looking at the day chart and its moving averages. And there's going to be days where you got two great ideas and they're going in both directions. You got two great, and you don't know which one to pick. And that's also the inevitability of the complexity of trading and all the variety of ways you can trade. And you just got to work through that. Having a simple system and sticking to a certain kind of trading is probably, in the big picture, the best way to go. Don't have too many plays in your playbook. A couple is okay. But right now, this is working on two of my plays at the same time. And I don't know which one to pick. So part of me really wants to grab this short right here while it's down here in this level. It just tested that one more time. It went right below it and ticked right below it and started coming back up again. So I think what I'm going to do here is jump on it and go long.
Order filled.
Okay, I'm going to
order canceled.
I'm going to do a $250 loss limit on this, and I'll let you know what happens. Remember, I am going against all the lower time charts because of the higher time chart, the day chart and the moving average and what it's telling me. If it does not work, I'm going to be down $250. So that's okay. Okay, I decided to close it probably early. After it spikes up like this real quick, it's here's that sweep. It swept the low of the day. It ticked over. It came right back up. This line is my entry point right here. I entered right in this area right here. There's my entry. There's my exit. And I could have just trailed it. I'd be out now if I trailed it. I would have probably been out for, I got a little bit more if I trailed it. But right now, looking at this over here, it didn't even go up as high as that pivot yet. So as soon as it shot up that 20 moving average, I figured just take profits. And, you know, I'm up $115. And I didn't hold it. I'm curious to see what would happen if I would have held it. And I like to always put that in the video to see if I did the right thing or not. So that's the last thing I'm going to add to this video. Should I have held it longer, or did I get out on the spike? Was that smart? Okay, it looks like after that spike, it would have pulled down for a nice little 50% scare. But other than that, right here, I got in down here at the nice entry at the bottom, I have to say. And when it spiked up, I got out, and I could have held it for a lot more. So that is the deal with that, and we'll see you on the next video.